You know what nobody tells you when you start trading? That you can have the best strategy in the world, the most sophisticated technical analysis, years of market data at your fingertips, and still lose everything. I learned this the hard way. It was a Tuesday morning in March 7 years ago. I'd been trading for about 3 years at that point, and I thought I had it figured out. My strategy was solid, my win rate was decent, and I was feeling confident, maybe too confident. I watched my account drop $12,000 in 45 minutes. Not because my strategy failed, not because the market did something unpredictable, but because I did something I promised myself I'd never do. I doubled down after a loss, broke my risk management rules, and traded angry. That day changed everything for me because I realized the enemy wasn't out there in the market. It was right here, between my ears. Welcome back to the channel, everyone. Today we're diving deep into something that transformed my entire approach to trading, and I'm betting it'll transform yours too. We're exploring concepts from Jared Tendler's groundbreaking book, The Mental Game of Trading. But more importantly, I'm going to share how these principles showed up in my real trading career, the ugly truth about my failures, and what finally clicked. If you're serious about not just surviving in the markets, but actually thriving, make sure you watch this all the way through. And hit that subscribe button, because we're building a community of traders who understand that the real edge isn't in the charts, it's in the mind. Let's talk about why most traders fail and what we can do about it. Part 1. The Invisible Enemy. So here's the thing that Tendler talks about extensively in The Mental Game of Trading, and it's something I wish someone had told me on day one. Your emotions aren't the problem. Let me say that again because it's counterintuitive. Your emotions aren't the problem. I used to think successful trading meant becoming emotionless, a robot, just executing trades without feeling anything. And I spent months trying to suppress every emotion I felt when I was in a position. Fear when a trade went against me, push it down. Excitement when I was up big, bury it. Frustration after a losing streak, ignore it. You know what happened? I became a worse trader. Here's what Tendler explains brilliantly, and what I eventually learned through painful experience. Emotions aren't your enemy. Unmanaged emotions are. There's a massive difference. Think about fear for a second. Fear gets a bad rap in trading circles. Everyone tells you to trade without fear, but fear isn't inherently bad. Fear is information. When you feel fear before entering a trade, that might be your subconscious recognizing something your conscious mind missed. Maybe the setup isn't as clean as you thought. Maybe the risk reward is off. The problem isn't the fear itself. The problem is when fear controls your decisions without you even realizing it. I remember this one trade vividly. It was on the EUR/USD, and the setup was absolutely perfect. Everything I looked for was there. Clean support level, confluence with my moving averages, strong fundamental backdrop. My strategy said enter here, but I didn't. I sat there, cursor hovering over the buy button, and I just froze. The trade went on to hit my target perfectly. I would have made $2,400. Instead, I made nothing. Why? Because 2 weeks earlier, I'd taken what looked like a similar trade and got stopped out. My logical brain knew these were different setups, different contexts. But my emotional brain didn't care. It remembered the pain of that loss, and it was screaming, "Don't do it again!" This is what Tendler describes as emotional interference. Your emotions literally interfere with your ability to execute your edge. And here's the kicker. It happens automatically, below your level of awareness, until you learn to recognize it. Now, let's talk about the other side of the coin. Greed. Greed is fascinating because, unlike fear, which makes you hesitate, greed makes you act. And in trading, acting impulsively is usually worse than not acting at all. I had this pattern for months where I couldn't recognize it. I'd have a winning trade, close it out for a nice profit, feel great about myself, and then within minutes, I'd be scanning the charts looking for the next setup. Except I wasn't really looking for my setup. I was looking for any setup that would let me keep that winning feeling going. Tendler talks about this concept of emotional accumulation in The Mental Game of Trading. You don't just feel greed in the moment. It builds up over time, like water behind a dam. And if you don't have release valves, if you don't have systems to manage it, eventually it breaks through and floods everything. For me, that flood usually came after 3 or 4 winning trades in a row. I'd feel invincible. I'd start taking trades that didn't meet my criteria. I'd increase my position size because I'm on a hot streak. And inevitably, I'd give back all those wins, plus some, in a single session. The cruel irony, the worse I felt after those impulsive losses, the more likely I was to do it again, trying to win back what I'd lost. It's a vicious cycle. And I'm guessing some of you watching this right now know exactly what I'm talking about. So, what's the solution? How do you deal with these emotional patterns? Tendler's approach, which I've adapted into my own practice, starts with something simple but profound: recognition. You can't change what you can't see. And most traders never actually see what's driving their behavior because they're too busy being driven by it. This is where the concept of process goals versus outcome goals becomes critical. Most traders, including past me, focus entirely on outcome goals. I want to make $1,000 today. I want to hit 70% win rate this month. I want to double my account this year. Those aren't bad things to want. But here's the problem. You don't directly control outcomes. The market does. You can execute a perfect trade and still lose money. You can follow every rule in your trading plan and still have a red day. What you do control is your process. Did you wait for your setup? Did you stick to your risk management rules? Did you avoid revenge trading after a loss? These are process goals, and they're the foundation of sustainable success. When I shifted my focus from did I make money today to did I trade my plan today, everything changed. Because suddenly, I could have a losing day and still feel good about my trading. And I could have a winning day but recognize that I'd gotten lucky on a bad trade, which meant I needed to tighten up my discipline, not celebrate. This mental shift takes time. Tendler emphasizes in his book that rewiring these patterns isn't quick. Your brain has spent years, maybe decades, building these emotional responses. You're not going to undo them with a weekend of positive thinking, but you can start building new patterns. And the first step is awareness. Part 2, the confidence paradox. Let's talk about confidence because this is where trading gets really interesting from a psychological perspective. Most people think confidence in trading means believing you're going to win. And when I started out, that's exactly what I thought too. I'd prepare for the trading day by basically hyping myself up. You've got this. You're going to crush it today. This is your edge. And you know what? On days when trades went my way, I felt like a genius, invincible, like I'd figured out the secret code to the market. My confidence was sky high. But then inevitably, I'd have a losing day. Or worse, a losing week. And my confidence would crater. Suddenly, I was questioning everything. Is my strategy broken? Am I reading the charts wrong? Maybe I'm just not cut out for this. This emotional roller coaster was exhausting. More than that, it was destructive. Because when your confidence is tied to your last few trades, you're not actually confident at all. You're just riding the wave of recent results. Tendler addresses this brilliantly in The Mental Game of Trading, with what I think of as the confidence paradox. Real confidence in trading doesn't come from believing you'll win the next trade. It comes from knowing you can handle whatever happens, win or lose. Let me tell you about the moment this really clicked for me. I was about 4 years into my trading journey and I just had my best month ever, up 18% on my account. I was feeling incredible, like I'd finally made it as a trader. And then the next month, I gave back 12% of those gains. I was devastated. Not just because of the money, though that hurt, but because I thought I'd finally figured it out. And apparently I hadn't. I remember sitting at my desk, staring at my trading journal, genuinely considering whether I should just quit. But then I did something different. Instead of spiraling into self-doubt, I actually analyzed what had happened. And here's what I found. In that losing month, I had actually followed my trading plan more consistently than I had during my winning month. That winning month, yeah, I'd taken some trades that didn't quite meet my criteria. I'd held winners a bit longer than my rules said to. I'd gotten a bit loose with my risk management. And I'd gotten away with it because the market happened to move in my favor. The losing month, I'd been disciplined. I'd followed my rules. I'd managed my risk properly. The market just didn't cooperate. This was a turning point for me, and it echoes what Tendler emphasizes throughout his book. Confidence must be built on process, not results. Because you control your process, you don't control results. Once I understood this, I completely restructured how I thought about my trading performance. I created what I called my execution scorecard. At the end of each day, I didn't just look at whether I made or lost money. I evaluated myself on specific process metrics. Did I wait for my complete setup before entering? Did I follow my stop-loss rules? Did I avoid overtrading? Did I stick to my position sizing rules? Did I manage my emotions appropriately? Each of these got a simple yes or no, and my goal became to score 100% on execution, regardless of profit or loss. This changed everything, because suddenly, I could have a losing day and score 100% on execution. That felt good. It built real confidence. And I could have a winning day, but score 70% on execution because I'd broken a rule or two. That was a warning sign, not a celebration. Tendler talks about this concept of unconscious competence in his work. It's the idea that true mastery happens when good behaviors become automatic, when you don't have to consciously think about following your rules because you just do. But here's the thing. You can't get to unconscious competence without first going through conscious competence. That's the phase where you know what you should do, and you deliberately do it, even when it's hard, even when it feels unnatural. This phase is uncomfortable. I won't sugarcoat it. There were weeks where it felt like I was fighting my own instincts with every trade. My brain wanted to do what felt comfortable, what felt exciting. But my plan required discipline, patience, waiting. I remember one particular day where I spent 7 hours watching the charts and didn't take a single trade. Not because there was no movement, but because none of the setups met my criteria. The old me would have forced something, would have found a way to justify a trade just to feel like I was doing something. But this was during my conscious competence phase. I knew what my rules were, I knew why they mattered, and I consciously chose to follow them, even though it was boring, even though I felt like I was missing out. You know what? That was one of my best trading days. Not because I made money, I didn't make anything, but because I proved to myself that I could be disciplined, that I could trust my process even when it meant doing nothing. That's real confidence. Not believing you'll win the next trade, but knowing you'll execute your plan regardless of outcome. Now let's talk about the flip side of this. Overconfidence. Overconfidence in trading is sneaky because it often looks like confidence. You're taking trades without hesitation. You're feeling good about your decisions. You're not second-guessing yourself. Sounds great, right? Except overconfidence is actually a form of unconscious incompetence. You don't know what you don't know, and you're so sure of yourself that you've stopped learning, stopped questioning, stopped improving. I went through a phase of overconfidence about 6 months after my breakthrough with the execution scorecard. I was trading well, my results were good, and I started to get a bit relaxed with my rules. Not in a way I consciously recognized, but in small ways, entering just before my signal confirmed. Holding positions a bit longer than my rules suggested because I had a feeling. It wasn't until I had 3 losing weeks in a row that I realized what had happened. I'd become overconfident. I'd stopped doing the detailed trade reviews I used to do. I'd stopped being as rigorous with my journaling. I thought I'd progressed beyond needing those training wheels. Turns out, those training wheels were actually my foundation. And without them, the whole structure started to shake. This is something Tendler warns about extensively in The Mental Game of Trading. The moment you think you've arrived, you've actually started to decline. True mastery is a moving target. The market evolves, and so must you. Confidence should never become complacency. Since that experience, I've built in regular system audits, where I deliberately go back to basics, review my rules, check my execution scorecard trends, and look for any subtle drifts in my discipline. It's like a pilot doing pre-flight checks, even though they've flown thousands of times. The fundamentals never stop being fundamental. The paradox of confidence is this. Real confidence makes you humble, not arrogant. Because when you're truly confident in your process, you don't need to prove anything. You don't need to take every trade or show off your wins. You're just focused on executing your edge day after day, whether the market pays you for it today or not. Part 3. The discipline delusion. All right, we need to talk about discipline because I think this is the most misunderstood concept in all of trading. Ask most traders what they need to succeed, and they'll tell you more discipline. And then they'll beat themselves up for their lack of discipline when they break their rules. They'll promise themselves, I'll be more disciplined tomorrow. As if discipline is just something you decide to have, like choosing to wear a red shirt instead of a blue one. But here's what I learned, and what Tendler explores deeply in the mental game of trading. Discipline isn't about willpower, it's about systems. Let me tell you about my discipline problem, or what I thought was a discipline problem. For over a year, I struggled with overtrading. I knew I was doing it. I knew it was hurting my results. And every night I'd promise myself, tomorrow I'll only take my best setups. I'll be disciplined. And the next day, I'd do the same thing. Take marginal trades, jump into setups that didn't quite meet my criteria, force trades when I was bored. And then I'd feel terrible about it, beat myself up, and promise to have more discipline tomorrow. This cycle went on for months. I genuinely thought I just lacked discipline, that there was something wrong with me, some character flaw that made me unable to control myself. But that wasn't the problem at all. The problem was that I was trying to rely on willpower in the moment, when I was flooded with emotions, when the temptation was strongest, when my rational brain was basically offline. That's not a discipline problem. That's a system design problem. Here's what Tendler helped me understand. If you're consistently breaking your rules, it's not because you lack discipline. It's because your system isn't designed to prevent the behavior you're trying to avoid. So I stopped trying to be more disciplined and started building systems that made discipline unnecessary. For my overtrading problem, here's what I did. I created a physical checklist, not a mental one, not a I know what my criteria are kind of thing. An actual printed checklist that sat right next to my monitor. And before I could enter any trade, I had to physically check off each item. Was the trend aligned with my time frame? Check. Was there clear support, resistance at my entry? Check. Was the risk reward at least 1? 2? Check. Was this my primary trading session? Check. If I couldn't check every box, I couldn't take the trade. Period. Now, here's what happened. At first, this felt annoying, cumbersome, like I was slowing myself down. But that was exactly the point. The friction I added to my trade entry process gave my rational brain time to catch up with my emotional brain. Within 2 weeks, my overtrading dropped by 60%. Not because I suddenly developed more discipline, but because I built a system that made the right choice the easy choice. This principle extends to every aspect of trading discipline. Revenge trading after a loss? Build a system that prevents you from trading for 30 minutes after any stopped-out position. Can't stick to your stop losses? Use hard stops programmed into your platform so you can't manually override them. Tendler calls this externalizing discipline in his book. Instead of relying on your internal willpower, which is a finite resource that gets depleted throughout the day, you externalize the discipline into your systems and environment. But here's something crucial that I learned. Systems alone aren't enough if you don't understand why you're breaking your rules in the first place. I had a pattern where I'd violate my risk management rules after a big win. I'd just closed out a great trade feeling amazing, and then I'd see another setup that was almost there. Not quite my full criteria, but close enough. And riding high on that winning feeling, I'd take it with a larger position size than my rules allowed. I tried building systems to prevent this. Limited number of trades per day, mandatory breaks after wins. But I kept finding ways around my own systems because the underlying driver hadn't been addressed. So I did something Tendler emphasizes repeatedly in the mental game of trading. I got curious instead of critical. Instead of beating myself up for breaking my rules, I started asking, What need is this behavior trying to meet? And here's what I discovered. After a winning trade, I felt validated, successful, like I'd proven something. And I was chasing that feeling, trying to extend it, milk it for all it was worth before it faded. Once I understood that, the solution became clear. I needed to feel validation and success from something other than the outcome of the immediate next trade. So I built in a new ritual. After any winning trade, I'd take 5 minutes to update my execution scorecard and review what I did well. This gave me that validation I was craving, but in a healthy way. That reinforced good process rather than chasing outcomes. And the urge to immediately jump into another trade, it faded significantly. This brings me to another massive insight from Tendler's work. The concept of mental preparation and what I call preventive discipline. Most traders try to muster up discipline in the moment, when they're already triggered, already emotional, already halfway to making a bad decision. That's too late. Real discipline happens in the hours and days before you ever open your platform. My morning routine is a perfect example. I used to roll out of bed, grab coffee, and open my trading platform within 15 minutes. No preparation, no mental warm-up, just straight into the fire. Now, my routine is completely different, and it's made all the difference in my discipline. Before I even look at a chart, I spend 10 minutes reviewing my trading plan. Not learning it for the first time, I know my rules cold, but reminding myself, priming my brain for what I'm about to do. Then I review my recent trades, specifically looking for any patterns of rule breaking. This isn't about beating myself up. It's about making those patterns conscious so I can watch for them during the session. Finally, and this might sound weird, but I visualize myself in specific scenarios. I picture a trade going against me immediately and see myself calmly accepting the stop loss. I picture a winning trade and see myself taking profits at my target, not getting greedy. I picture a boring day with no setups and see myself comfortably sitting on my hands. This mental rehearsal, which Tendler discusses extensively, is essentially preloading my responses so they're automatic when the situation arises. It's not about positive thinking or manifesting outcomes. It's about practice. Athletes do this all the time. They mentally rehearse their performance before the game. Not to guarantee they'll win, but to strengthen the neural pathways of good execution so that when the pressure is on, the right response is automatic. Trading is no different. The market is your opponent. Your emotions are the pressure. And you need to have practiced your responses so thoroughly that they happen without conscious thought. Here's what I want you to understand. If you're currently struggling with discipline, I want you to know it's not your fault. You're not broken. You're not weak. You're just trying to solve the problem the wrong way. Stop trying to be more disciplined. Start building better systems. Stop criticizing yourself for breaking rules. Start getting curious about why you're breaking them. Stop relying on in-the-moment willpower. Start preparing your mind before the session even begins. Discipline isn't something you have or don't have. It's something you build systematically over time through smart system design and deliberate mental practice. Part 4, the learning trap. We're going to talk about something that might make you uncomfortable, the possibility that you're learning wrong. I spent my first 2 years as a trader consuming everything I could find. Books, videos, courses, webinars. I learned about technical analysis, fundamental analysis, risk management, position sizing, market psychology. I filled notebooks with concepts and strategies. And you know what? I was still losing money. Not because I didn't know enough, but because knowing and doing are completely different things. This is something Tendler highlights beautifully in The Mental Game of Trading, and it's something I wish I'd understood earlier. You don't have a knowledge problem. You have an execution problem. Think about it. Do you really not know that you should cut your losses quickly? Do you really not know that revenge trading is bad? Do you really not know that you should follow your trading plan? Of course you know these things. Every trader knows these things. But knowing intellectually and being able to execute under pressure are worlds apart. This is what Tendler calls the learning trap. Traders think they need more information, more indicators, more strategies. So they keep learning, keep consuming, keep searching for that missing piece. But the missing piece isn't knowledge, it's skill. And skill isn't built through consumption, it's built through deliberate practice. Let me give you an example from my own trading. I knew about the importance of journaling for probably 2 years before I actually started doing it consistently. I'd read about it in multiple books. I'd heard traders I respected talk about how crucial it was. I even started journals half a dozen times. But I'd do it for a week, maybe two, and then it would fade away. Too busy, too tedious. Didn't seem to be helping immediately. The problem was I was treating journaling like information to acquire rather than a skill to develop. I thought just knowing I should journal was enough. But knowing you should do something and having built the habit of doing it are entirely different. When I finally cracked this, I approached journaling like a skill I was developing. I started small, just 3 questions after each trade. What was my setup? Did I follow my rules? What was one thing I did well? That's it. No elaborate essays. No deep psychological analysis. Just 3 simple questions that took 2 minutes to answer. And I committed to doing it for 30 days straight, no matter what. By the end of those 30 days, it had become automatic. And then I could layer on more depth because the foundation habit was solid. This principle applies to everything in trading. You don't need to learn more about emotional control. You need to practice emotional control. You don't need another course on risk management. You need to practice executing your risk management rules even when it's uncomfortable. Tendler emphasizes this concept of mental reps throughout his book. Just like a basketball player doesn't get better at free throws by reading about free throws, you don't get better at trading psychology by reading about trading psychology. You get better through repeated practice. But here's the key. It has to be deliberate practice. Random practice doesn't cut it. Deliberate practice means having a specific skill you're working on, practicing it with full attention, getting immediate feedback, adjusting based on that feedback. For trading, this might look like, this week I'm specifically working on cutting losses quickly. I'm going to pay full attention to my emotional state when a trade goes against me. I'm going to note whether I followed my stop immediately or hesitated. And I'm going to adjust my approach based on what I learn. That's deliberate practice. And it's vastly more effective than just trading randomly while vaguely hoping to get better. Another aspect of the learning trap is what I call complexity addiction. Traders think that if they're struggling, it must be because their strategy isn't sophisticated enough. So they add more indicators, more time frames, more complexity. But complexity doesn't create edge. In fact, it usually destroys it because more complexity means more room for emotional interference. I used to trade with 7 different indicators on my chart. 7! I felt like a pilot in a cockpit, monitoring all these different signals. And I was losing money consistently. Then I stripped my system down to price action and 2 simple moving averages. That's it. And my results improved immediately. Why? Not because simpler is inherently better, but because I could actually execute a simple system consistently. With my complex system, there was always room for interpretation, always a way to justify whatever trade I wanted to take emotionally. With a simple system, the rules were clear. Either the setup was there or it wasn't. Tendler talks about this idea of removing mental clutter in his book. Every decision point you add to your trading creates another opportunity for emotional interference. Simplicity isn't just elegant, it's functional. As we wrap up this section, here's what I want you to take away. Stop consuming and start practicing. Stop searching for the missing piece of knowledge and start building the skills you already know you need. Stop adding complexity and start mastering simplicity. Your trading will transform not when you learn one more thing, but when you practice one thing until it becomes automatic. Conclusion. So here we are. We've covered a lot of ground today, and if you're feeling a bit overwhelmed, that's actually a good sign. It means you're taking this seriously. Let me bring this all together with where I am now in my trading journey, because I want to give you that emotional payoff I promised at the beginning. Remember that Tuesday morning 7 years ago when I lost $12,000 in 45 minutes? When I broke all my rules and traded angry? That was my rock bottom, but it was also my turning point. Today, I'm profitable, consistently profitable. Not because I found some secret strategy or magical indicator, but because I did the work that Jared Tendler outlines in The Mental Game of Trading, the work of understanding my emotional patterns, the work of building real confidence on process instead of results, the work of designing systems that make discipline automatic, the work of practicing skills instead of consuming information. And here's the beautiful part. Trading is no longer stressful for me. I don't end my days emotionally drained. I don't obsess over every tick. I don't lie awake at night worrying about positions. Not because I've eliminated emotions, I still feel them, but because I've learned to manage them. I've built systems that protect me from my worst impulses. I've developed skills that allow me to execute under pressure. This journey isn't about becoming perfect. I still have bad days. I still break rules occasionally. I still feel fear and greed and frustration. But now I have tools. I have awareness. I have systems. And most importantly, I have a process I trust. That's what this work gives you. Not perfection, but progress. Not certainty, but confidence. Not elimination of challenge, but the capability to meet it. If there's one thing I want you to remember from today, it's this. The market will always be unpredictable. You can't control what it does, but you can control how you show up. You can control your preparation, your execution, your response to both wins and losses. That control, that mastery over yourself, is the real edge. It's what separates traders who wash out in a year from traders who build sustainable careers. It's what took me from blowing up my account to trading for a living. And it's available to you, not through some secret knowledge, but through the work of developing your mental game. I encourage you to pick up The Mental Game of Trading by Jared Tendler if you haven't already. It's one of the few books I revisit regularly, and every time I do, I find something new. But more than that, I encourage you to start practicing. Pick one thing from today's video. Maybe it's building a trade entry checklist. Maybe it's starting a simple journal. Maybe it's evaluating yourself on process instead of outcome. Just pick one thing and commit to it for 30 days. Build that skill. Then add another. This is how transformation happens. Not through dramatic overnight changes, but through small, consistent steps in the right direction. If you got value from today's video, please hit that like button and share it with a trader friend who needs to hear this. Subscribe if you haven't already, because we're building something special here. A community of traders committed to mastery, not just money. Drop a comment below and let me know. What's the one mental or emotional challenge you're going to work on this month? Let's support each other in this journey. Thanks for watching, and I'll see you in the next one. Keep trading smart, keep trading disciplined, and remember, the real market you need to master isn't out there. It's in here.